Good morning. Mike Niemiec here with ADMIS Investor Services, filling in for Steve Freed on Tuesday, May 15th. Looks like we're going to start off a little bit better here for our grain and oilseed markets. The overnight trade saw beans up in the neighborhood of around 20 to 15 cents. The corn market was up roughly a nickel. Looks like we got a little bit of late strength in the wheat market, almost up a dime. Meal market up around $8 a ton. Old crop, that being old crop, new crop up around $4 or $5, and the soybean oil market up around 40 points. So number one, we're on a little bit of a bounce after being kind of mixed lower yesterday. We have been basically liquidating and or working lower in our markets. More so for the soybean complex than for grains. This has been mostly attributed to the big buildup of net long positions, mainly by the specs that we saw in the oilseed complex as opposed to the grains and the grains. This has been most evident in both the volume open interest sheets that we get on a daily basis and the commitment of traders report. The bounce last night seems to say that maybe perhaps for the short term, this break that we've been in roughly $1.25 in the bean market, roughly around 50 cents in the corn and wheat, maybe a little bit in a hiatus right now. What do I mean by that? That maybe we had a little bit of a reshuffling of the cards. We've seen that where we had a USDA report for May come on out last week. We had May contracts go off the board yesterday. We've also been working our way through maybe the first month of crop progress condition reports. And all those, once again, seemingly reshuffle the deck a little bit as far as positions go. And now we'll get into the next phase as perhaps as far as seeing what our crop progress, as we are continuing to move along quite rapidly. We had our numbers come out last night. We're a little under 90% planted in corn. We're a little bit over 40% planted in beans, around 95% planted in our hard spring wheat. All those numbers are above average, above a year ago. Very, very conducive, and part of the reason why we've seen a little bit in our break in our market over the past couple of weeks. But now we're going to get into the next stage. We're going to go and see if we're going to continue, because once it stops raining, we start to worry about when's the next rain going to come. There's nothing in the immediate forecast. So after reshuffling the deck a little bit as far as seeing the break in prices, I guess we're going to go and sit back and see if we aren't going to go and what's our next weather event going to be. Are we going to continue to get the timely rains, and or are we going to start to come into something prolonged? That is somewhat of a idea in here for the short term. Weather forecasters are more or less on the warm and dry path than they are as far as a next needed rain per se. So I think that gave the market a little bit of a boost last night. Like I said, we had our May contracts go off the board. We'll now start looking at the old crop July contracts for corn and beans. Basis levels, which were red hot for corn, more so for beans, but not to say that the beans were not, had backed off. That attributed to some of the weakness that we saw recently, but now we'll probably start to reinvigorate positions again. Is the farmer going to sell? Is the business going to be out there coming back to the U.S.? How much cash strength are we going to go and see as we now work our way towards the delivery period for the July contract, of which we have swimming out there over 1,000 contracts of beans registered for delivery, but we did get a little bit of corn deliveries last night, 4, but those remain relatively light, and we'll see how the cash markets turn on ahead. So anyway, we're going to start off with a little bit of a bounce. Like I say, maybe we reshuffle the deck. We're going to go and try and build upon perhaps the most recent lows that we had in here, awaiting the next weather event, and or is any more business coming back to the U.S. with this price break that we've seen. Are we going to have a reinvigoration of the cash markets? And all said, as far as how high of a bounce can be, I would have to say that generally 20 to 30 cents higher from where we're at, we'll start to run into quote-unquote resistance, and then perhaps then we'll be looking at more definitively what the weather forecast is like to say that we should retreat from those levels or perhaps carry above. So once again, this is my opinion, not so much ADM and or ADMIS, and that's comments for today, May 15th.